Let the shills come out, ladies and gentlemen. Here in this video and in the comment section, I am saying what I believe. Tomorrow is going to be make it or break it for a technical breakout. We're going to get into exactly why I am saying that. We're going to skip the intro. Do what you guys got to do. Hit the like button for me. Consider subscribing to the channel. Check out the pinned comment down below and the links to get free stocks down below in the description. But why is tomorrow make it or break it, or potentially by the end of the day today, but really by tomorrow? We're sitting at this neckline at about $28.50 per share. We are above this right now, so that is a very bullish sign. But if we pull up the Bollinger lines, and these are obviously two standard deviations away from the current stock price, these top lines, but the 20-day simple moving average has been riding the price all the way down to this neckline. So we are being compressed once you break out above, one, the neckline, but the 20-day simple moving average. That is incredibly bullish, and that should send us a whole hell of a lot higher, since we have not been over that since late November. We have not been over the 20-day simple moving average in a very long time. Now, if you actually just Google search this, it's pretty straightforward. What does it mean when the price rises above the neckline? When the price rises above the neckline, it signals a breakout of the pattern and a reversal to the upside of the prior downtrend. The neckline connects the reaction lows of a head and shoulders pattern or the reaction highs of an inverse head and shoulders pattern. That is why I think this breakout is coming. I'm not a fortune teller. I don't know exactly. If I did, I would tell you guys, and you guys would be the first to make all of the money. But like I said, breakout above the 200-day simple moving average. After that, the 200-day moving average at $32.73 is the next level to be watching for, and then $35 as a psychological level. And really after that, I think we're going to have a lot of momentum, and we're going to be able to go to the mid 50s or even possibly the $60 range, like I have predicted in my price prediction of $60 by late January, if not early February. A lot of that is actually based off of fundamentals for the stock heading into 2022, but also why I think a breakout is coming. Keyword I think, because the MACD has been bullish since December 20th, and we haven't really went up since December 20th. We've kind of went down. So you're seeing this divergence between the share price and the price action moves, going from about, what was this, at the high of $32 now to $28.96, but the MACD has not budged at all. It's still incredibly bullish. Once we do get more volume that comes into the stock, that's really when you're going to see those explosive moves to the upside, because today we're only at 22.1 million shares that have traded hands. We're about halfway through trading, so I do think it's going to be a low volume day. That's actually very bullish. You'll never see a increase to the price action in a substantial way, going from high volume to low volume, high volume to low volume, like we seen back in August. What happened with the stock? Nothing too crazy. What happened in October? Nothing too crazy. Or September. But when you go from low volume to high volume, like in June as well as January, that's when you see explosive moves to the upside. Now, let's get into some of the other information you guys need to know, like the ortex data. So we're looking at 19.08% short interest of free float, about 98 million shares that are sold short, with a share utilization of 77.65%. Days to cover at 2.38. So this is actually starting to tick up a little bit, and that's exactly what we want to see, because obviously these discorrelate each other. So if the days to cover is going up, the stock price is going down. Stock price is going up, days to cover is going down. So we're at these primed levels, almost yearly all-time highs for the days to cover, almost higher than where we were at in January as well as in June before these basically 10x's in share price. So I think when you add all this together, incredibly bullish. We should get the exchange reported short interest data that comes out here in the next couple of days or so, and that'll come out in between 20 and 25% in my personal opinion. As far as the stock tracker data, expiring this week, nothing too crazy. 96,000 calls that are out of the money, about 9,500 calls that are in the money, and nothing substantial for the puts. About half the amount of calls, and nothing too crazy for the next following 2 weeks. We're seeing something very strange happening on the option chain for that January 21st, 2022 expiration date. We only see 262,000 calls that are out of the money, 74,000 calls that are in the money. Take a look back to just 2 days ago, December 25th. This was on Christmas. We had 438,000 calls that were out of the money, 116,000 calls that were in the money. So you're obviously seeing some institutional owners of these calls trying to do a different strategy here. And that's what I'm going to look into to try to figure out exactly what they are doing. Probably trying to limit their exposure of these calls that they are selling to obviously provide liquidity to the marketplace, as market makers do. Possibly they don't want to hedge out as many shares. Possibly they do see this rally coming. Either way, very interesting. Still a substantial amount, over 300,000 for open interest that is on this expiration, but definitely something to dig into and try to figure out what is going on. Max pain for this Friday is at $29 per share. So that would signal about a close at where we are currently at, which we need to see a close better than that, obviously, by the end of this week to confirm this bullish rally. And I do think that'll probably happen tomorrow. We'll probably break above the 20-day simple moving average, as well as this neckline to remain above that. So I don't put as much weight as most people do on the max pain, just because it's not always going to be an indicator. Yes, it works some weeks, but I don't think it's necessarily going to work this week. The max pain could always change and fluctuate around by the time we get closer to Friday, but I do think AMC will be over $29 by Friday. And why I am saying that this week is so important, because this is the last week of 2021. So hedge funds and institutions, your big players in the marketplace, they don't care anymore about 2021. Obviously, it's the last week. All of their tax strategies are already implemented. Sure, there's some last minute, folks in big money that is trying to figure out their tax strategy and what they're going to write off and what they're going to sell, what they're going to buy this week for 2021. But a lot of that is going to be looking ahead and waiting for really January to start buying a lot of these stocks. And I think there is a very compelling fundamental case for AMC stock to own it and not be short on it in 2022. So it's a possibility shorts are more incentivized to cover by, the end of this week to essentially keep that loss and to offset some of their gains for 2021. If not, I think you have a huge incentive to buy the stock. Like I said, the fundamental case is very strong for AMC heading into 2022. And we see that. We see the institutional investors that are buying the stock at a 10 times faster rate in the month of December. Why is this? 2022, we have a ton of blockbuster movies that are heading to the theaters. And if Spider-Man didn't show people what the theaters can do, the kind of numbers that these films can produce, then you would be stupid, because Spider-Man is well over $1 billion already. This film could be in the top 5 best films or highest grossing films of all time. And we have a huge lineup of these kind of blockbuster films in 2022. It's apparent AMC is going to be free cash flow positive. It's apparent that they possibly could report a profit to the bottom line in 2022. Why is this? And what do analysts fail to actually realize about AMC? After 100 years of being in business, there is a lot of fat to the business. A lot of theaters that aren't performing very well, that are losing money, a lot of things that they are doing that don't make a lot of sense to basically bring profits to the bottom line. There's something crazy that happens when you're 2 weeks away from bankruptcy. You have to cut down on all of your theaters that are shit, that aren't making any money, and obviously they haven't reopened those theaters. You have to change up what you're doing to be a more efficient business. So even if we get back to those same numbers we were at in 2019, which a lot of people estimate, if you take a look at this article, currently projected to hit $9.2 billion in 2022. This is the domestic box office. Then AMC will actually bring home a huge profit to the bottom line, because their cost of revenue. The amount of money they have to put into the business to generate their revenue is substantially lower than where it was in 2018 or 2019 when they had to put up $4.5 billion to run the business to generate $5.5 billion of total revenue. So not too much room for a profit margin there, whereas in 2022, we're only going to be at about $3 billion to $3.3 billion of cost of revenue that AMC has to pay to potentially make $5.5 billion in revenue, $6 billion in revenue. So a much more efficient business. And that's where that is our gain, because AMC is going to impress all analysts. It's going to upset the short thesis even more in 2022. So that is going to be all for this video. Hit the like button for me. Consider subscribing to the channel. Let me know in the comment section, what do you guys think about this information? What do you think, and why do you think the stock tracker data is not reporting hundreds of thousands of contracts that were just reported on Friday for January 21st, 2022? Put on your tinfoil hats. Let me know what you think is going on here. Love and appreciate you guys. Thanks for watching this video. I will see you in the next one.